Good morning, America. Good afternoon from Germany. This is Pascal speaking, and today is PPI Day, Producer Price Index. Therefore, fasten your seatbelt because it's going round. We will see what will happen because normally CPI Day there's more volatility than on PPI. But we will see what can happen because last week we had CPI data, Consumer Price Index, and there we had the drop of 250 points to the downside, and then we went back up again. But the numbers came out like the expected numbers, and therefore we have to see what happens today. So let's see on my screen what's going on today. I will show you Nasdaq. Just a moment here. Here it is. So let's see. Hope my stream quality is fine. I see that YouTube is showing me that my stream is a little bit low quality, but it should be fine. Every lamp is green. Okay, just write in the chat if you have some issues, then I can try to correct it. But yeah, I hope everything is fine so far. So here is Nasdaq Future. We are at 10,666 points right now. Let's see it on a daily time frame. We made new highs, higher highs than yesterday. We were at the 11,685 points yesterday during the normal trading hours, and tonight during the Asian session we went at highs of 11,693 points, 8 points higher. And why did we jump here? Let's see it again on a 5-minute chart. You can clearly see it here at 3:40 a.m. my time. This was 9:40 p.m. Eastern time. There we had this big jump here to the upside up to 11,693 points. This was in a 5-minute candle a move of 0.85%. And this happened because the Bank of Japan decided, here's the announcement, decided not to higher the interest rates. So they let their interest rate ultra dovish, as you can read here, at minus 0.1% for the short-term interest rate, and the 10-year Japanese government bond yield is around 0%. So that means even if the inflation rate is rising in Japan, they will let the interest rate at low levels. So this causes even more inflation in the next months probably, but it's good for the markets. Why? We talked about it already, because let's bring this currency chart up here again. US dollar, Japanese yen, the classic currency trader chart here for all the carry traders. They borrow money for cheap in Japanese yen, as you have seen, almost 0% interest rate. And then they take the money to the US dollar and invest it in the stock market, or just let it there on a bank account and collect there for 4.5%, whatever. And then they can collect the yield difference. So what happened? The Japanese yen was weakening, US dollar was getting stronger. This was good for all the carry traders, but then suddenly we saw the turn here in last October. And since then we had the announcement, you see this big candle here on a weekly chart. The Bank of Japan accepted a broader range for the 10-year government bond from -1 to +1%, but they still want to stick to the 0% rate level, and this caused now the up spike again. So US dollar was getting stronger and the Japanese yen was weakening again. So let's see it on a 5-minute time frame. Then you can see the same time here, 3:40 a.m. my time, 9:40 p.m. Eastern time. We had this big jump here. We made almost back the whole movement. So let's just draw a Fibonacci line because I like my Fibonacci levels here. So you see we went almost back all the whole move. But on a weekly time frame, I was expecting the prices to come back here to higher levels, to 136, to produce a head shoulder formation here. We haven't seen this so far, so we even dropped below this neckline here and retested it tonight. So let's see where this week will close. So this week will be important for US dollar Japanese yen, because if we close below the 130 level, then this should cause a further downfall of the Japanese yen here. And yeah, then probably we won't see a shoulder head shoulder formation. But if we manage to come back here, then this will be a false breakout to the downside, and we will probably manage to go back to the 138 level here, which was the previous high point from the first shoulder here in July last year. Okay, this is important for traders because of carry trading effects, and therefore the Bank of Japan decision was important for the markets, and therefore we have seen the jump in the middle of the night. Even if there were no news from the US, the news from Japan were important for the markets. And we can also see this in here, ES future. ES future is S&P 500 future, and therefore we see the same move here. No higher move than yesterday. Yesterday the high point was 4,035 points. Tonight we were at 4,029 points. So it has more effect to the companies from the tech sector because they are higher leveraged. They have more debt burden. Therefore it is more important for them than it is for the older economy. And this is also the reason why the German DAX and the British FTSE 100 are rising faster and are gaining more traction than the US indices at the moment. If we go to German DAX, I have it here, the DAX 40 most valued companies in Germany. You can see we made higher highs than previous November. We are almost back at 15,200 points, and this is a higher level. We are just 10% below the all-time highs at the 16,000. What was the high point here? 16,290 points. So just a few points missing here. This is 6.7% right now. So yeah, this was a fast reversal, as you can see here. Why? Because it is an older economy, and the companies in a German DAX 40 have less leverage. So they are better financed, and they can make money even when the interest rate levels are high. And they are able to set higher prices even if the inflation is high. So they can take the cost. They have higher cost, of course, but these costs they can take on to their customers. So this is not a big issue for them, but for tech companies it is a big issue because they want to have growth. And you won't have growth if you higher your prices month by month, and therefore they are not able to set higher prices, and this is a problem for the stocks. So normally you have an inflation, you have less inflation risk with stocks, with stock investments overall, because normally the big stock companies are able to set higher prices. And this is a perfect example here with German stocks. You see they are able to set higher prices and to make more profit as long as they don't have to pay higher wages, because then they probably won't have higher profits anymore. But for now, it's even good. Higher inflation is good because they have a reason to tell their customers to pay more. Why they have to pay more, and this is the reason why the European stocks are rising faster now than the American ones. And especially Euro USD, we talked about this in the previous streams. Euro is rising. Where's my chart? Euro USD here. Euro is rising. As you can see, we made highs here of 1.087, but now we are trading sideways the 5th consecutive day now. But we had the breakout above the previous high here, so it's still an uptrend, and we probably will see higher levels, maybe up to the 1.10 level. We can see this on a week chart here. The previous highs were here about 1.15. But at first we have to go at the 1.10 level, also a psychological level, and then the next level would be 1.15. Let's see what comes first, the lower and the worsening labor market in the US and the recession risk. This could take the US dollar again to gain traction here, so Euro USD would turn to the downside because it is a safe haven and money will flow back to the US dollar. Or if we will see higher stock prices and then Euro will gain traction here and rally again. So 4 minutes left until PPI. So let's move to the data here in our economic calendar. So today is Wednesday and we will have also core retail sales in 3 minutes, PPI data, And yeah, also some other data today. Industrial production with 2-star events in about 48 minutes after the market, or right when the market opens. But at first, let's see what PPI will bring us. And then there's also a speech from FOMC member Bullard, but he is not a voting member anymore, therefore it's not really important. So PPI will be more important. Let's have a look at the yearly number, PPI. I don't know why they claim here 1 star instead of 3, because it's a yearly number. But I will look at the yearly number because we can better see the difference here from the previous numbers. And there you see it often changed. So the estimates were not really good, so it changed a lot. Sometimes it was higher, sometimes it was lower than the forecast. So everything can happen this time. I read that someone expected the number to be in line because CPI was in line. No, the estimates can be totally different. We don't know about the estimates, how exact they are. And it can be lower, it can be higher, everything can happen. And I looked at the previous numbers and we had lower movements than on CPI days, but we had huge movements. But in 70 to 80% of the time we had up moves. So we had not sharp downfalls, we had up moves, and this was because we had here lower than expected numbers, as you can see. And when we had higher than expected numbers, it was only 0.1, 0.2 percentage points higher, so not far higher, and this was good. And therefore I think that we can see a rise in the stock market, and yeah, at first reach my target in Nasdaq with 10,728 points, and then we will see from there what happens. But we have to prepare for everything. Everything can happen. We can see the same like last week, a huge drop of 250 points, even if the numbers are in line, and then again a rise again. But you see here, this is my target level, 11,728 points in Nasdaq. There I will close my remaining long position in MNQ and NQ futures. Maybe I'm a little bit conservative because we can go higher to the 12,000 level, of course, but I don't want to trade against the main trend. The main trend is still a downtrend. I don't want to trade against it because I see a worsening recession. I see all the data from the economy and it's not looking good. And I think that we will probably retest the lows. I don't know when, maybe in March, April, I don't know. But yeah, we will probably have lower levels again. And this was just like a short squeeze because a lot of people went short too early and now were squeezed out. So we first reach the max pain point for the bears, and then we will sharply turn to the downside again to put the knife into the bulls again. And yeah, now let's move to the data to see what will happen when the news are out and what will happen here on a 1 minute time frame when the news are out. PPI and core PPI in 15 seconds, so be ready. Five seconds left. And the news are out. Seems to be bullish. Lower than expected. Whoa, a lot lower than expected. Look at this. Look at this. 6.2% instead of 6.8%. This is a lot lower than expected. So this is really, really good. And you see, we barely touched my level 11,720. Just 8 points below my trigger. So yeah, hopefully we will reach it, and yeah, probably we can go to higher levels. This is a really good number. Look at the monthly number. Even the monthly number is far below. This is a deflation now. So good deflation number. This is a good sign for next CPI, because if PPI is a lot lower than expected, and probably the next CPI will also be a lot lower. And retail sales are down. Yeah, even more down than the expectation. So it's not a too good sign because it shows the recession risk here again. But for now, in the short term, it's a good sign for the market. And this is what we want to see. We want to see that the inflation risk is gone and that the central bank doesn't have to set higher interest rate levels. This is what we want to see. Now let's just hop to CME FedWatch tool. We had the 92% of expectancy for the 25 basis points move. Let's see if it changed. already. I don't know how often they recalculate here the expectancies. Yeah, it takes some time because a lot of people are on the website. Yeah, we will wait 5 to 10 minutes and then we'll probably see that we will here be at 95 or maybe higher. Don't know if we can go higher because the meeting is on February 1st. But you see the numbers are low. So this is good for the market. And maybe I was a little bit, a little bit too far away with my level again. Just 6.25% away from the high point now. But I think the numbers were good. And we can even rise higher than the 11,700 points. Let's see what happens here. Numbers are good, so this is a really bullish factor now. You can see there was no sharp downturn for now, so we went higher about, what was it, 70 points higher, 60 points higher. This is good, but it's not a sharp move like we had last week on CPI day, even if the difference from expectancy is a lot less, as you can see here. Yeah, thank you, Ralph. Hope you are in a long position too here. This is one of my last remaining long positions besides the natural gas with my short put. It is not working too good for me. So we can move right away to the commodities here and just let it run. We'll hear the ringing when my position is gone through. So unfortunately, I'm not out yet because of 6 points. Like always, I miss it by just some points. Yeah, that's it. Okay, numbers are good. Let's talk about earnings first. Let's stick to the stock market first. We had the banks earnings. Banks earnings were good. Yesterday they were good and bad together, but more important than the previous quarter is the next quarter. So the outlook will be more important for every company having earnings in the next days and weeks. And there will be more important earnings, especially from the big companies like Procter & Gamble tomorrow. And next week on 25th, we will have Tesla. So everyone will look at, where is it? After market close, Tesla. And yeah, the big companies will be next week and then the week after. And we will also have Netflix on 19th. So on tomorrow. And yeah, it's getting interesting now with the earnings season, so we will have a lot more volatility to come. And that's interesting for me as an option trader because I like to sell options and therefore I need volatility, but I don't want to hold my position over the earnings. I just want to set and to get into new post earnings trades. So I want to wait for the earnings, and if there is a bad miss of the earnings or bad outlook, then probably stocks will tumble, and then I can get into a put position, a short put, a seller put, and collect nice premium with high implied volatility. So for example, Tesla, you see the stock went higher yesterday by, what was it, about 8% yesterday. So we went far outside of this sideways trading range. This is clearly a bullish signal here, and we are pre-market higher now 3.7%. It's a really good sign because Nasdaq was almost no movement yesterday, and this is clearly a better performing stock than the market. And today again, so this is a bullish signal here for some reversal here. Let's see how far we can come. Yes, you can see the 50% reversal is right at the $150 level. So probably this can be a target, but also here today this will be a resistance level, $138. Let's see how far we can go to the upside today. Let's go to the commodities section now. Crude oil was going to higher levels together with the stock market. We had the breakout here, or trying to break out here above the previous highs. So one attempt, second attempt, third attempt, missed it, then closed below Fibonacci level, and now we have the breakout today with a good stock market expectations. Therefore, next target should be the previous high point here from this December 1st at $83 and about 30 cents. There's still some room to the upside, 1.9%. So I have no position in crude oil, but for now it's looking like a reversal here and maybe a break of the downtrend. So you see lower highs here, and now we can have the breakout and form a higher high. Let's see if it lasts until the next week. and if we can close this week higher here in crude oil. Now to natural gas. As I told you, I have a short put position. It's in the money right now, $3.70 strike. Only 8 days remaining until expiry. So yeah, it's getting volatile here, but you see the weakness of natural gas, still trading below 9 EMA on a day chart here. Just trading sideways for several days now, holding the $3.40 level. So the previous lows here were $3.41.9, here $3.41.9 again, and today $3.42, it was lower, $3.38, $3.41, and here we had $3.34 today. So we are trying to establish here maybe a sideways trading phase. Let's see if we can hold the levels. The next important support level is around the $3 level, so 3.0. Let's see if we will hit this one, or if we just trade sideways here around the $3.50 level. It is an important level, but I don't see why natural gas prices should rally from this level here, because you see that we are in a downfall now for more than a month. And yeah, you could say it is oversold. We should go to the upside, but there's no fundamental reason why we should go to the upside, as long as there's not worsening weather or colder weather, especially in Europe, where we need liquefied natural gas from the US, and therefore there's no reason why natural gas prices should rally, especially natural gas here, NG, because this is the US natural gas, and in Europe we trade the TTF and the exchange on Rotterdam, and the prices are falling, like here natural gas prices are falling in the US. And yeah, let's go to WIX. WIX is below 20 again. We had the drop yesterday because of the good stock market, and we still are below the 20 level. Last week we were at the lows here of 18, so yeah, not far to the 18 level. There's almost no fear. And yeah, this is sometimes risky. If no one is in fear, no one is secured, no one has puts. So this can be risky for the market, and we can see a sharp turn if the market is turning to the downside. We never know when. We have some room to the upside for the bulls, but when the market is turning to the downside, then probably we will see a sharp and fast rise here in VIX and in volatility. What else do we have? Let's go to back to this. Let's talk about sugar. Yes, you can see I have a short position here in sugar. I opened it a little bit early, as you can see here. I'm in the green today now, but not in the green since the opening here. So let's go on a day chart. As you can see, we were trading sideways here. So I tried to enter here with one contract, but I wanted to go more short when we make new lows here. Maybe it will take one more week to go back to the downside. As you can see here, the Fibonacci levels, we retested the 50% Fibonacci, and we could stick here below the 38% level, but now we are trying to push higher, to trade higher here. Let's see if this next Fibonacci level is holding. This was a previous high, as you can see, so it is more important. I have only one short position. It's a small position for my portfolio size, but you can see here, this is what I want to trade, the 7% downfall here if we make lower lows and fall below the 0.19 level. This is where I want to take on a bigger position. So I'm just waiting, but I have one contract here on fire, and I'm just looking what will happen here in the next days with the sugar prices. Back to the stocks, to Amazon. Amazon is going, let's see it on a day chart, is going sideways now, but you see we are at the previous high points. We managed to go higher last week and are now trading sideways at the resistance level here. So no breakout yet, but yeah, possibly we can manage to go to higher levels, same like with crude oil. So as soon as we go at the $100 level and higher, it's looking more bullish for Amazon. And here for, what else do we have? Where's my, no, not Tesla. Google, I have Google open. You see the same pattern here, sideways trading, but we already went above the previous high points here. So it's looking better, but yeah, not really bullish. So I want to see something like with the Tesla stock, a real outbreak here. So we need to go back above the 100 level. This is just an important psychological level. And you see previous high point was here. Therefore, we still have some room to the next level here, about 8% to the upside. And then we have potentially more room to the upside if we can manage to go back there. Let's see Apple as one of the largest ones. Apple and then Microsoft. Microsoft is the largest one in NASDAQ and S&P 500. So Apple is looking better. As you can see, we are at previous resistance level now. And as soon as we can go above, it's looking more bullish. I will redraw Fibonacci levels here to have better target points. So previous high point here and the low point here. You see we managed to go 50% from the low point now. So this is the first resistance level, and you see previous high point was also at this level, so it is an important resistance level here. But as soon as we manage to go higher, next level would be $140. This is previous low point acting as a resistance, and yeah, if we break here, this is a potential of about 2% to the upside here. Let's see Microsoft. Yeah, Microsoft is looking more bullish. So they announced the layoffs too now. So also a bullish sign for Microsoft, cutting costs. Yeah, they announced spending more than $1 billion in the next years for ChatGPT. I think that most of you now know artificial intelligence and yeah, what it can produce. But here it's now looking good for Microsoft stock. You see we are back in the sideways trading area here. So we have to break above $245, above the previous high points here to be more bullish. Let's see Fibonacci levels here, and you see $241 is the current level. So this is also the 50% level, and as soon as we can manage to go higher above this level and above 245 previous high point, then it's looking more bullish for Microsoft. But you see here 2, 4, 6, 7, the 7 consecutive green days in a row. This is really strong for a stock, and therefore Microsoft is a strong stock right now. And Spider, yeah, of course we can also talk about Spider, but Spider is the same like ES Future, so it's moving the same like ES. We already talked about ES. As you can see, we went higher from the lows, higher than NASDAQ, but we are now just trading sideways here in this area between these two Fibonacci levels. And yeah, it's more difficult to see the outbreak than on NASDAQ. NASDAQ is moving a little bit faster here. And yeah, we are back at the level where we had the breakout. So this happens really often. But I'm sure that on the market open, we will see more volume, and these will probably push the prices to a higher level. So let's go on a day chart here. And here you see that we had more volume to the upside, about 9% to the upside here in NASDAQ. And in ES Future, we had only, what was it from the low point? It was about 6% to the current price level. So of course, NASDAQ is more volatile than S&P 500, but here the same. As soon as we can go above the current high points here, above Fibonacci level, this is at 4,030 points. Then the next level would be 4,087 points, and previous high point here, 4,180 points from the last, I think it was CPI day on December 13th. So still more room to the upside, to the high points about 4%. And yeah, let's see what happens first, the weakening numbers from economy, or still more room for the bulls to run to the upside, and yeah, to see more bears squeezed out of the market. This is what probably will happen here, like a false breakout to the upside. But this can happen really heavy. And yeah, I don't think that it's over now. We can see more room, more trading to the upside. But I want to play it safe, and therefore I want to be out of this long position as soon as possible. I have still opened one position here in this Logitech trade. I opened a 45 strike, or $47.5 put strike. I sold this put for 80 cents, and it's now worth 55 cents. And you see the stock is pulling higher now. And pre-market, we are already, let's see the pre-market data here. Pre-market, we are already back at $55, so that's good. Implied volatility is not falling down. This is what I want to see. Less implied volatility to bring down option premium, and then I can buy back the option for less. This is what I want to see, but I opened the position here on this day, and even this drop here, you see this was a drop of about 4%, but my option price was lower on this day. Why? Because you see implied volatility came down. So you can trade even if the stock is going against you. This is the interesting thing, that you can trade options, put options, not long but short, so you sell put options and you make money even if the stock is going against you. Like here, there was a drop in the stock, but I made money because the option premium came down and I will be able now to buy it back for a lower price. And now the stock is rising again. That's good. Implied volatility is staying the same. Also good. Better would it be if it would drop. But yeah, every day is a time in my favor because theta decay. So every day I'm making money if nothing happens, just by the prices to go sideways. And this is what I like. You see here, this was the earnings move. So it went down 16 or 17%, and implied volatility rose. This is interesting because normally implied volatility drops because the news are out, everyone knows everything now. And this is what I want to see in the upcoming earnings now for other stocks. I want to see sharp drops, rising implied volatility, and then I will step in with selling short puts options. And there I can make some money. This is interesting for me. This is my trading style. What else do you want to have analyzed? Linde. Yeah, Linde is moving out of DAX 40. They want to go solely to the US. I think they overtake an American company, and now they have both listings in the US and in Germany, but they want to be delisted on a Frankfurt Stock Exchange and therefore be delisted from DAX. It's really, really sad because it's an old German company, but they think that the stock market and the whole universe of investment and so on in the US is better for them. Therefore, they want to delist in Germany. Linde, big German company. Let's bring this up on a chart here. Linde. Don't know the ticker symbol because I'm not trading it really often, but here it is. L-I-N. Linde. So yeah, German stock, you see implied volatility is right. Wow, Linde's implied volatility is rising heavily, as you can see. The problem here with the European options is that it's really not liquid, so you have big gaps between bid and ask on Eurex. Eurex is the German derivatives market where you can trade futures and options. And yeah, it's not really liquid compared to the US, therefore I don't like to trade German options. But yeah, this is really an interesting implied volatility here for Linde. Thank you for bringing it up, Ralph. I will look up into it later when I have more time after the live stream. Maybe I will trade again a German option. Who knows? It's interesting to see this high implied volatility, but maybe they will have earnings too. And yeah, I will look it up and let you know later. Are you ready to trade Tesla yet? Yeah, I'm ready, but I want to wait for the earnings. So the earnings are on January 25th, so next week, and I will wait for the earnings. Maybe we will see a miss on earnings or a worse than expected outlook, and then I can maybe collect a higher premium after the earnings with less risk. This is what I want to wait for. Whatever happens, I want to wait for the earnings because I don't want to hold an option position over the earnings, and therefore I will just be patient and wait for the earnings to come for Tesla. Ralph is always long, yeah. Always long in good mood, yeah. That's the best thing. Always be happy, whatever happens. So back to Nasdaq. What's happening here? Not a lot, but moving to the upside again, looking good. You can see a nice candle, a lot of volatility, but it's bullish. So you see not a lot of wicks on the downside here, almost no move to the downside. That's really rare, and this already shows, even if you haven't seen the numbers, you now know these numbers must have been bullish. They must have been bullish, and that's the case here, and I'm pretty sure that we will reach my target on the opening and maybe make higher highs. But as I told you, I want to be safe here this time. I want to be out early enough, because last time on CPI day I missed to get out with the whole position. I only sold part of the position, and then we had the sharp drop after CPI, as you can see here. We made higher highs, so this was interesting to see, but unfortunately it was just the third time to retest the levels. And yeah, we sold off, as you can see, and I only sold half of my position here, and therefore this time I won't make the same mistake again. Maybe I will miss these 300 points or 250 points to the upside, but yeah, it's okay because I entered early enough. I entered here at 10,780 and 10,850, enough of my position. It's a small position, yes, but yeah, enough profit. And I already sold last Friday here, small part. Missed to re-enter on Monday. Monday was a holiday, but the futures were traded. You could trade NASDAQ and ES futures, but I missed to enter here at the low point of 11,500 and what was it, 10 points. Yeah, 11,510 points was the low. Would have been nice to enter there, because you see previous low points were here. We had this supporting area, and yeah, it finally held, but I missed to enter, and therefore I'm just in my small NASDAQ position here. I will hold it until 11,728 points. So please don't ask me to tell you my position if I enter or leave a position. I will always let you know here in my live streams, or when you are in the same chat like me. I will tell you my levels, but you will always have to do your own due diligence. Yeah, it's up to you which position you take, which profits and which losses you make. It's your own decision. So you can't rely on me. I'm doing my own trading. I'm not responsible for anyone else. So it's up to you what you trade, and always take responsibility for your own trading and never ask others what they would do. Have your own trading style. This is really important to have a clear mind and clear view on what you are trading. You have to focus on your trading and to have your own levels. Of course, you can ask others for their opinion, but don't ask if they are in a position when they want to step in, to step out. That's not a good trading style. You have to figure out your own trading and to get better in what you do. That's important, because I'm not a signal service here, and therefore, again, like in every stream, no investment advice here. It's just for entertainment purposes. Even if I tell you my position, if I tell you where are the interesting points to sell and to buy, it's no investment advice here. Palantir, yeah, let's bring up Palantir. So not this chart, but the Linde chart. Palantir. Yeah, really sharp downfall here. On a week chart, we had the lows of $5.92. Previous low was $6.44. So we made even lower lows. So it's still in the downtrend on a week chart. Let's see it on a day chart. Trying to go back from the lows, we managed to go back 20%, but that has nothing to say for this stock here. So let's bring up my favorite tool, Fibonacci, from the low point to previous high point. Just draw a smaller one. We managed to go back this 50% level. This was previous low point, as you can see, so it's a little bit more bullish, but we have to make higher highs. So it would be more important to go above the $8 level to be more bullish, because you see it's still making lower highs, lower lows, and I don't want to be early in those stocks, because you see how often you thought you would have made a nice catch here, but if you want to be in long term, yeah, it's not interesting to be the first one to catch the bottom, because there can still be a lower bottom. If you want just to trade it for just some days or swing trade it, yes, it could be interesting, why not? But I don't see that we will have a breakout here. I like to have the breakout trades. If we're making higher highs, then you can go long, or if we're making lower lows, then go short. But here we are just in a normal correction here, from the down to the up, and making a lower high somewhere. We don't know where. But because I'm expecting the market to drop again soon, maybe in the next 2 or 4 weeks, I don't want to take any long position right now in a single stock, unless there's a good reason to be in a long position, and I cannot see one here for Palantir right now. Yeah, you still see we are below previous lows here from August, September. So this should act as a resistance, this Fibonacci level, and you see previous low points here. It's important. This area will be important here between 725, 750, because you see We tested the lows, but we closed at about this level. So this will be an important area for Palantir. As soon as we go above 750, it's more interesting, especially above $8 level. Then we will probably see more rise here in this stock. Will you short Nasdaq at previous high? Probably yes, at the 12,000 level. I will take on some smaller shorts. I don't want to be too aggressive this time, maybe with a smaller position, but I already drew a line here. You can see it is 11,950 and 12,050 points between this area, maybe right above the 12,000 level. I want to take on a smaller short trade, but I won't be short before we reach this level. Maybe we will turn before, we maybe won't reach 12,000, but then I want to see confirmation. I don't want to step into a short trade too early here, and I just want to be out of my long trade for not risking anything more here, and then waiting for confirmation, just being out of a trade and just watching the market, what will happen here, because as you can see, it is a sharp rise. So we haven't seen this for several weeks and months now. These consecutive green days. There was only one red day or one red candle here, but I think it was a higher closing, 11,608, 11,608, so the same. But this was Monday, so market was closed, so this candle is not important. And you see all the other days had green candles and closed higher. And yeah, this shows how strong the bulls are. Therefore, I don't think that on this good news of PPI, we will have lower closing level today. Probably not, but maybe we will try a second, third time to get above this resistance level, this Fibonacci level, which was a previous low point here on December 14th. So therefore, I want to be out at this level and not risk it to be in front of a steamroller picking up pennies, because I'm already big in the green and just want to save my profits here, not to risk everything just to get the final 250 points here to the 12,000 points level. Yeah. Nick was hoping for the $5 for Palantir. Yeah, from to the downside. Why $5? Because we have never been there, and $5. I wouldn't expect a level to come which we have never seen. So yeah, the all-time low was this level here, $5.92. We don't know if we are making lower lows. You can still wait for it to happen here, but it's not looking like we are going there right away. So wait for confirmation to return to the downside that this is a lower high, and then we can probably see the $5 level. But I wouldn't wait for it. If you want to be in a stock, then yeah, on a 10-year time frame, what does it matter if you go in at $7 or at $5? It's not really a big difference if it's in 10 years it's at 50 or 100. So yeah, you have always to take it into comparison with your time frame you are trading in. If it's just a day trade or a swing trade or an investment for several years, then it's a big difference where you enter and where you exit. So for me, it's not really important to be on point, because I'm a swing trader. So sometimes my levels are overrun. Sometimes we just don't hit my level like today. But I have time, because time is in my favor here. As you can see, as long as I'm picking up the right direction, I just have to sit and wait. And this is the most important part in trading. You have to be calm. You have to be patient. Being patient is the most important thing, because a lot of traders miss out a lot of profits. They are patient when they are on losing trades, so they stick to their losers. But that's a big issue, because they lose more than they win. They are in fear when they win, because they think they will lose everything again. They will lose their gains, give back their gains to the market, and therefore they sell just to be safe. They have secured their gains, but that's a big issue. You have to let the market do its work, and to have the waves, the swings. It's just normal. As you can see, we always have these swings to the up and down side. That's normal. That's stock market. But if you cannot stand this, then you shouldn't trade. It's normal. You have to be patient as a swing trader. If you cannot wait, then just day trade. But then when you are in a day trade, don't say at the end of the day, oh, it's not looking good for me, now it's a swing trade. No, don't change it. If it's a day trade, then close it at the end of the day. If it's a swing trade, then hold it and don't close it right away on the first day just because you are in the green 1%. Yeah, you have to have the right position size fitting your time frame. That's important. If it's a swing trade, then you have probably more movement, and therefore you can take on only a smaller position size. If it's a day trade, you can take on a larger position size, but you're only in for a low move. So it's just 1 or 2% maybe, not more, because within a day, normally we don't have these moves like here on December 13th, like there we had, what was it? This was crazy. This was 4% on a day. Or here on November 30th, this was 4.5%. It's even more crazy. So this is not a normal day. You shouldn't expect these days, and especially not to catch it at the bottom and to ride it to the top point. Therefore, if you day trade, then you have to fit your position size to the movement. You have to have a larger position size for a lower movement, like a half or 1 percentage point. But if you swing trade, then you have to lower your position size because you're expecting a larger movement, like here with a 9%. Yeah, that's important. Always have a plan how long you want to be in a trade and how large your position size can be. Your daily chart has one more candle than mine. Yeah, probably because I'm looking at the future price, and on Monday it was closed. So this one here is Monday 16th. The markets were closed, the stock market was closed, but futures were trading. So you were able to trade Nasdaq futures and ES futures, but the stock market was closed. And therefore I have a candle here for Monday, even if you won't see this candle on a single stock chart because stock market was closed, but futures could be traded. BYND, okay, one of the last stocks, BYND. Where is my, yeah, let's take this Palantir chart to open BYND. BYND was really strong in the previous day. So as you can see on a week chart, it's just trading sideways. But here on a day chart, we see it was strong here, 57% up move, probably a short squeeze because this is a stock which is heavy shorted. And you see right at the previous tops here, there we had the sell-off. And you see this candle here, especially, yeah, really interesting to see because the first ones were already selling here to the downside, and we went back up again, even made higher highs yesterday, and now we are selling to the downside. So probably we will have some more selling pressure to the downside, and then if the stock is still strong, we will probably see on a fourth attempt the push above the $17 level. But let's see the levels to the downside here. With my Fibonacci extension, we are already below the first Fibonacci level, so next target is here, $14.88, and a 50% correction, which we often see on these big moves here, would be $14.15. So this could be a first target to the downside here. This would be about 10% to the downside if you want to ride it here to the downside. But yeah, be cautious. It's still a strong stock and it's heavy sold. So a lot of short sellers are in this stock, and this could cause some more short squeezes again. If more buyers step in, then probably more short sellers will have to cover their open positions, and this will cause a lot of buying pressure and therefore fast rising prices. So be cautious if you want to short sell it or to profit from lower prices. But yeah, interesting could be the breakout above the previous highs, because yeah, on a fourth attempt we normally should make it and break the highs and set higher levels. But fundamentally, I'm not a big fan of this stock, so I want to be true with you. This is not one of my favorite stock. When we were the last time at what was the previous high point, I think it was 180 or something like this. Let's see. What was the high point? Even above 200, crazy. We were at $239 here back in 2019, and yeah, this was just a crazy stock. Someone pitched it to me. I was in a jury of a stock pitch competition. There was a student pitching BYND to me and I called him completely crazy, and we were at the $100 level, and I said never ever will this stock double. You see some weeks later we doubled the stock, and yeah, it was just completely crazy. And then it went down to $75, made new lows here at $48, retested the previous IPO price, rallied back, and now you see all-time lows here at below $10. So I don't know what this stock will do, but yeah, it's a difficult industry, even if it's rising. But I don't think that this stock has a lot of room to the upside, because we talked about it at the beginning of the live stream. Interest rates are rising, and if you have high interest payments to make, and if you have a high leverage like BYD has, so they have a lot of debt burden, and therefore it will be more difficult as long as the interest rates are staying high, and this causes more pressure on the stock. There is a reason why the short sellers are shorting the stock. It's just not out of the blue. There is a reason, but yeah, they can be squeezed out of their short position as soon as we go above. So this is looking like the previous Tesla chart I showed you. We are in a sideways trading range. It's just lasting longer here for several weeks. And as soon as we break above here, there will be more short sellers squeezed out of their positions, and we can see more and higher levels. You can see how fast this can happen to the upside and to the downside. So here we had some consecutive green weeks and we went up 80%. So this can happen again, and 80% would have make levels like $30. So this can happen probably, but I don't like the stock long term here. Just my opinion. Yeah, let's go back to the news again to talk about the rest. Retail sales were lower. Yes, we already talked about this. So more recession risk here. Not really good for the near future, maybe. But at first, no inflation risk. So we have now these 2 points. Inflation risk is going down, and the fear of higher interest rates is going down. But now the recession risk fears will come up. And as long as the numbers will be lower than expected, then these fears will grow and grow and grow. So in the next months, you will have to have a look at all the numbers from the economy, like retail sales, from housing market. So tomorrow and the day after tomorrow, we will have more numbers from the housing market. Let's have a look at this. We'll just throw out the one-star events, and then we will have a look at the tomorrow, and there we will see, like every week, initial jobless claims, Philadelphia Fed Manufacturing Index, and here on Friday we will see existing home sales. So these figures will be more important in the next weeks and months, because there we will see the pressure from economy and the worsening economy and the recession risk. And this will probably cause more fear on the stock market, and then the bulls won't be in favor anymore, and we will see a sharp downturn, in my opinion. I can be completely wrong, but that's my opinion, and therefore I want to be out of my long position. That's the reason. So I was long, I was a bull in short term, just for the first 2 or 3 weeks in January, and then I'm bearish again for the first 2 quarters of 2023. So let's see what happens, but I think we won't have a soft landing like Jerome Powell is expecting. We will probably see a sharp downfall in economy, and I'm curious how this will end, but we will figure it out together. And therefore stay tuned to my live stream or to the next live streams. I will live stream every major event in outcome from economy, because these will be triggers for the market to rally or to a downfall. And therefore subscribe to my channel if you haven't done so far, and click the bell to be informed every time I go live. I wish you a happy trading day and a nice rest of the week. We will see us tomorrow or the day after tomorrow, whenever you have time to watch my live stream.